What is crack-a-lackin', my crypto fiends? Ryan Rotolo here at the brand new Crypto Fiend Studios. Thank you guys for joining me today. We have a lot we are going to be diving into. But first, if you're not a part of the community and you have not hit that subscribe button already, what the heck are you doing? If you want quality cryptocurrency content almost every single day, I have been slacking lately, I apologize, then you need to hit that subscribe button and join on in for quality educational content and, of course, helping you guide yourself to financial freedom. Why wouldn't you want that? So smash that subscribe button, join on in, and let's get into the news today. So we have two negative articles. Well, one's not too negative. It's kind of funny in my opinion. Actually, both of them are pretty funny. All the negative stuff in cryptocurrencies is funny because you know it's not going to happen or you know it's not true, but it's always a good thing to point it out so you guys are more educated on the overall space and what's happening in the community. So nonetheless, let's jump right into things today. First off, I want to talk about FCA proposes a ban on cryptocurrency products. So if you guys are not familiar with the FCA, it's the Financial Conduct Authority based in the United Kingdom. Now, I know the majority of us are based in the United States, but it's always good to understand what's happening over in other countries because if you guys aren't familiar, the cryptocurrency space is a world economy, which is absolutely incredible and very, very sexy. So let's keep moving on. The UK's markets regulator has proposed a ban on financial instruments linked to digital currencies such as Bitcoin, warning that such products could cause huge losses for retail consumers unlikely to understand their risks or values. The Financial Conduct Authority said products such as derivatives and exchange-traded notes that reference crypto assets were ill-suited to small investors. It cited their extreme volatility, the difficulty in valuing them, consumers' patchy understanding on what they were buying, and the increased risk of financial crime. So, Christopher Willard, the executive director of strategy and competition at the FCA, said, as with our work on the wider CFD and binary options market, we will act when we see poor products being sold to retail consumers. These are complex contracts built on top of complex assets. So, this is absolutely ridiculous. Now, I completely understand where maybe their perspective is. They want to protect retail investors from losing all their money in the cryptocurrency space, and it makes sense to a certain extent, but are those really their intentions? If anything, they want to jump on this bandwagon of regulating the cryptocurrency space so they can line their pockets with either cryptocurrency cash or cash in general. But their bullet point facts are a little ridiculous in my opinion. Now, I'm based in the United States, and I'm sure the majority of you watching this are, and I'm sure you guys are familiar with accredited investor laws and regulations, and this is sort of the route that they're trying to bring cryptocurrencies in the United Kingdom. They want retail investors to not be allowed to invest into cryptocurrency products, assets, etc., due to volatility, due to bad actors, financial crime, and difficulty in valuing them, and consumer patchy understanding. Let me explain something to you guys. I got into cryptocurrencies a little after I turned 18 years old. And yes, I've lost money. I'm sure every single person watching this has lost money. But I've gained so much out of simply educating myself as well as losing money. You learn from losing money. You learn what not to do and what to do next time. So I understand that they want to put this regulation in place to protect retail investors, but the way to protect retail investors is somewhat of letting them make those mistakes of investing, losing a little bit of money, and educating themselves, or at least helping to educate retail investors, not just banning them as a whole. Even personally for me, I think the accredited investor laws in the United States are a little ridiculous. The main bullet point to be an accredited investor is that you have to earn over $100,000 per year of income. And I get it to a certain extent. These governments want to protect the retailers from losing money, but you're also preventing them from investing in all of these new startups, like back in the day when Amazon launched all that stuff. If you weren't a accredited investor, you were not able to invest. So you were not able to seek the rewards and the benefits of getting in early as an accredited investor. And that's not cool. You should be able to do whatever you want with your money. If you want to put it on the line, it's no different from gambling to a certain extent. Obviously, there's more to it, but still, it sort of plays the same role, and I think you should be allowed to do whatever you want with your money. Also take into factor, when it comes to like ICOs and IEOs, I could see that being a little bit different, because ICOs obviously are way more speculative, way more of speculative assets compared to Bitcoin. But to put the overall cryptocurrency market under this blanket of you have to be at this certain level to be involved because of volatility, not understanding the market, and protection, all that sort of stuff, is absolutely ludicrous, and I really doubt this is going to pass in the United Kingdom. But I definitely wanted to point it out to you guys, for those of you based over there, as well as who knows, maybe this could branch down the grapevine into other countries down the road. So that's just something to take into consideration. Also, keep in mind, I really do believe it's a little too late to put something like this in place, at least for the majority of people that are already involved. If you own your Bitcoin, you own your Bitcoin. It's not like they can put you have to be an accredited investor over you, and then you have to sell out of your Bitcoin. You own it, that's it. No one can take it from you, and that is the power of cryptocurrencies. So next up, we are going to be talking about Facebook and Libra. Now, this is a really, really fascinating letter that the United States the United States House of Representatives Committee of Financial Services sent to Facebook a couple days ago, asking them to stop the production of Libra, their cryptocurrency, and Calibra, their cryptocurrency wallet. So we are going to be reading over pretty much the majority of this letter. It's not too long, but it's pretty fascinating in my opinion. And I also want to get your guys' opinion down below, what you think this is all about, and are you kind of scared of this? So, dear Mr. Zuckerberg, Miss Sandberg, and Mr. Marcus, we write to request that Facebook and its partners immediately agree to moratorium on any movement forward on Libra, its proposed cryptocurrency, and Calibra, its proposed digital wallet. It appears that these products may lend themselves to an entirely new global financial system that is based out of Switzerland and intends to rival U.S. monetary policy and the dollar. This raises serious privacy, trading, national security, and monetary policy concerns for not only Facebook's over 2 billion users, but also for investors, consumers, and the broader global economy. On June 18th, 2019, Facebook announced its plans to develop a new cryptocurrency called Libra and a digital wallet to store this cryptocurrency known as Calibra. To assist in its venture, Facebook has enlisted 27 other companies and organizations to form the Libra Association, which is based out of Switzerland. These companies span the financial services and retail industry that include payment systems like MasterCard, PayPal, and Visa, and technology giants like Uber, Lyft, and Spotify. Investors and consumers transacting in Libra may be exposed to serious privacy and national security concerns, cybersecurity risks, and trading risks. Those using Facebook's digital wallet, storing potentially trillions of dollars without dispository insurance, also may become unique targets for hackers. For example, during the first 3 quarters of 2018, hackers stole nearly $1 billion from cryptocurrency exchanges. This system could also provide an under-regulated platform for alien activity and money laundering. And there's a little bit more, but we're not going to be reading into it. And this was signed by 5 representatives of the House of Financial Services. So, what do you guys think of this? This is kind of scary, I'm not going to lie. So we all know Facebook is launching their cryptocurrency. If you guys were not familiar, Facebook's building Libra over in Switzerland, so they cannot necessarily be touched right now by the United States with regulatory action and stuff like that, which obviously is a smart move for Facebook. I'm not going to lie, guys. This is a little scary, especially the approach that the House is coming at. They're saying, hey, you need to have some regulatory framework on this because if this goes out of whack, you could literally screw up the entire world economy with this through your simple cryptocurrency alone. And that actually makes a lot of sense because they go on to say this could potentially be a multi-trillion dollar asset. And if you don't have some sort of regulation in place, if hackers somehow manage to tamper with exchanges and wallets and stuff like that, you could have literally a global crisis, especially how this is branching out to over 27 financial and cyber companies as of right now. You have Visa, MasterCard, PayPal, Uber, Lyft. This is going to be a massive organization, and it seems like they are really concerned on this, and they're coming at it in a relatively polite way. But is this going to stop Facebook from building their baby? Is it going to stop them from building Libra? I don't know. I really don't think so. And if they don't do so, I'm sure the US is really going to try to take further action, maybe aggressive action in preventing them from doing something like this, because this is a big deal, guys. These companies are literally creating a new currency that will be able to be transacted all around the world, and who knows, down the road it could become a world currency. I really doubt that's the case. That's a little ridiculous, but that's definitely something you have to take into factor, and that's why the U.S. House of Representatives is so concerned. Now, on the other hand, this is kind of awesome for cryptocurrencies because the U.S. House is seeing that this is a serious deal. This is not just Bitcoin being a couple $1,000s right now, or Bitcoin being even $20,000. This is a huge deal where trillions and trillions of dollars could be flooding into this, and digital assets are going to be the norm. And this could definitely push, like they said in the very beginning, this could definitely push other based currencies in the world today, even like the US dollar, out of the picture and create a whole new financial system online. And it's happening all through these social media platforms and these transportation platforms. This is absolutely crazy, guys, and I'm very happy that you are here watching this, because who knows, in a couple years, Libra could be a world currency, one of many world currencies, and you were a part of learning about it in the very beginning before anyone else. So I just wanted to touch on that. I will keep you guys updated if anything else comes out, but that is definitely going to be interesting to see how Facebook deals with this situation. I really doubt they're going to stop here, especially how they have the world's largest payment platforms backing them, and they are based over in Switzerland. So we will see what happens. But if we keep moving on, next up, I do want to talk about ErisX receives a license to trade futures. Now, this is what we've been waiting for like over like a year and a half now, and everyone was saying we need a futures contract, we need futures, because that will bring Bitcoin to astronomical levels. Right now, Bitcoin is doing relatively well. If you look at the little LED Bitcoin screen over here, Bitcoin's close to $12,000 again, or over it. But nonetheless, ErisX has received a license. The Commodity Futures Trading Commission has granted ErisX a license that will allow it to offer digital asset future contracts. The trading platform is backed by popular discount brokerage TD Ameritrade, and I was talking about TD Ameritrade in yesterday's video, so that is awesome that they did announce this. In the case of Bitcoin, futures contracts are binding agreements that allow traders to make bets on whether the cryptocurrency price will rise or fall over a certain period of time. ErisX's future contracts will be physically settled, which is very important, meaning the buyer of the contract will be receiving actual Bitcoin. This is in contrast to the cash settled contracts offered by other exchanges such as CME groups. By establishing a marketplace and developing infrastructure typically associated with traditional markets, ErisX has eliminated many of the obstacles institutional investors face in accessing digital assets. ErisX CEO Don Wilson said, "This is another step in the development and maturity of the markets." So this is seriously good news, guys. If you are interested in futures, you will be able to do so through TD Ameritrade. And what's very, very important in all of this is that they will be settled in Bitcoin. So this overall will help the price of Bitcoin compared to in the past where like with CME, where stuff was settled in cash and on paper and you never had to touch the digital asset itself. So this is very important. Now, in my opinion, they talked about how this will help a lot of institutional investors and retail investors get involved now because they had issues with doing so in the past. I think that's complete baloney. Anyone can go onto Coinbase and create an account and purchase yourself some Bitcoin. But if you do want to do this sort of futures gambling where you bet whether the price is going to go up or down over a certain period of time, by all means, go over and do that. And you could do that over on TD Ameritrade. So a lot of exciting stuff happening. I know we started off a little negative. Mike Novogratz is well known for giving his little takes on where he believes the price movement of Bitcoin over the short term is going to be going. So I just wanted to give you guys this to shed a little bit of light on the current cryptocurrency market. So Bitcoin is poised to consolidate from here, implying a trading range from 10,000 to 14,000. The psychological price point and key technical level, respectively. A brief aside, Novogratz announced that last week the Galaxy sold a portion of its BTC holdings in the $13,000 range because it felt as though the market was getting overextended and frothy. According to Novogratz, fresh all-time highs for Bitcoin, meaning a move past $20,000, is imminent. He claims that if institutions continue to foray into the space, whether that be Spotify, Visa, Uber, and even Facebook, otherwise the aforementioned milestones should come with ease. Elaborating on the matter, he says, "I'm not selling the next time we hit 14,000. The second time we reach that level, a move to $20,000 is likely. I don't expect this to happen in the next few weeks. I don't expect it to happen in the middle or the end of the fourth quarter, but the next wave will come when institutions, the state of X, Texas Teachers Union, and those guys come in, and then you will see Bitcoin hit $20,000 and higher." Now, this is one person's perspective. Take this with a grain of salt. In my opinion, I do think we are going to crush all-time highs before the end of 2019. Just my opinion. Let me know what you guys think down below. But the way the market's setting up right now and how we are starting to get these institutions really coming out into the light and saying, hey, we are getting into cryptocurrencies. That's what's going to push Bitcoin over $20,000 and beyond. And I really believe we are not going to see mainstream media talk about cryptocurrencies until Bitcoin breaks all-time highs. And for the majority of retailers, they're not even going to bother to touch it at that point, in my opinion, for Bitcoin, at least attempting to buy an entire Bitcoin, because you have to keep in mind the average Joe Schmo cannot just drop $20,000 into Bitcoin. Now, I'm not saying they're not going to dollar cost average, work their way in and stack as many Satoshis as you can, because you could always try to do that. But once we hit $20,000, I seriously think we are going to push to $40,000, $50,000 within a couple months after that, and it's going to be a parabolic move. And after that, if you weren't already involved, it might be a little too late to ever picture of owning entire Bitcoin again. I'm not trying to be a Debbie Downer. I'm just being realistic on the matter. So next up and lastly, we are going to be going over a new cryptocurrency exchange that just came into the space called Eterbase. They are today's video sponsor. I hope you guys don't ever mind when I have a sponsor on the channel. It really does help grow the channel and allows me to continue to create content for you guys. And of course, it will always be disclosed, so you don't have to worry about me sort of shilling anything to you guys. This is all for you to do your own due diligence. Go out there, learn about these platforms, these exchanges, these cryptocurrencies if you are interested in them after we discuss them on the channel. So first off, Eterbase did just announce today that they will be launching on the Binance chain and the Binance decentralized exchange, while simultaneously also having their Ethereum-based token called with the ticker symbol XBase, and you will also be able to use both of those on the Eterbase platform, where they will be integrating BEP tokens as well, which is Binance-based tokens onto their platform. So Eterbase, again, they are relatively new, but I did want to go over a handful of features that compares them from other cryptocurrency exchanges. So first off are the fiat gateways. Eterbase allows you to seamlessly transfer in and out of your bank accounts in the European Union very seamlessly, so you don't have to go out to any sort of on-ramp platforms. You could do it all on the Eterbase platform and seamlessly transfer in and out. Now, that is only based in the European Union as of right now, but hopefully it can trickle on down into the United States down the road. Next up, we have negative trading fees. Now, for market makers, this is huge. By locking the exchange's token Eterbase coin, the XBase ticker, there are 8 member tiers available. Now, this is something I personally haven't really seen on any other platforms, where there's sort of levels, and it sort of gives traders incentive to continue to grow their portfolios on the platforms. As you do work your way up into these different tiers, you get a handful of different benefits. So all 8 tiers will give varying discounts from 0.08% fees at level 1 to 0.01% fees at level 8 for being the taker on the trade. And what that means is pretty much when you're buying into a cryptocurrency, you're being the taker, and you get that percentage of fee, whatever tier you are in. And the tiers are all based off of your overall history on the platform, as well as the amount of funds you have stored on the platform as well, in a handful of different cryptocurrencies. So next up, we have compliance and security. Eterbase will have banking grade security and compliance with European legislation for GDPR and AMLD4, AMLD5 through 2020. Eterbase will also be publicly traded on the stock exchange via CICAV funds for qualified investors. So if you are based in the European Union and you do want to get a piece of the stock of Eterbase, you can go over to the stock market and do that as well for qualified investors. And then on top of this, they are working with the National Bank of Slovakia on compliance in several fields, such as crypto to crypto and crypto to fiat, security tokens, crypto derivatives, initial exchange offerings, and payment systems based on directed graphs. Eterbase are also aiming to join the innovations hub with the central banks, as a lot of future regulations in this space are still drawn back. This will put Eterbase at the top of the list for ongoing compliance, where other exchanges will be treading carefully. Fourth, we have exchange engine. Quite frequently, we hear of exchanges overloading, missing the ability to process orders in time when the market has high volatility. This will be a thing of the past with Eterbase. With the architecture they have implemented, their order matching component can deliver up to 15 million trades a second on a single node messaging system, delivering up to 20 million messages a second over the network between 2 nodes, and a DP engine that is linearly scalable with maximum performance limited only by cost. All this will be supported by a latency of under 100 microseconds. That's up to 1,000 times faster than many traditional systems that we use today. So the team, of course, this is a hugely important sector of any company. You want the team to be well organized. They all need to have something that the others don't, so they work fluently together. And given the task of delivering the above, while Eterbase has some of the world's top developers on their team, they will be focusing on the founding team that drives the business forward, and that includes the CEO, Robert Oxel. He's a hedge fund manager and former board member of the European Investment Banks. Chairman Joseph Brechel, portfolio manager and board member of investment funds. And CTO Martin Smutny, 15-year experience in IT leadership and the implementation of e-government in Slovakia. So as you guys can see, they seem to know what they're doing. They have pretty much everything you want in a relatively new cryptocurrency exchange. They're focusing on the legal stuff first before they branch out into having a proper forming exchange, but they did just launch on June 17th, so they are up and going. You could head over to Eterbase and set up an account and start trading today. Now, take all of this with a grain of salt, guys. This is not financial advice. They are today's video sponsor. Thank you, Eterbase, for sponsoring the channel. Greatly appreciated. But definitely something to take into consideration that they did just partner, and they are being brought onto the Binance chain and Binance decentralized exchange, and then Binance tokens will be brought onto Eterbase, so they will be working side by side to improve volatility and liquidity throughout all of the markets that are offered on those two exchanges. So let me know down below what you guys think of Eterbase. Let me know your opinion on Bitcoin, where you think it's going to be by the end of the year, as well as the Facebook news. I find that very, very fascinating with Facebook and the House of Representatives and where that's all going to go. Leave a comment down below. Let's interact. Let's get this community going, because I am here for you guys. You're here for me. I love learning from all of you. So don't be afraid to leave a message, and let's get some conversations going down below. Thank you guys for watching. If you did find this video informative, don't be afraid to smash that subscribe button and join on into the community with welcoming arms. We accept anyone except people that don't like Bitcoin. Of course, we don't accept them. But nonetheless, join on in, and I will catch you guys in the next.